OK，这边应该是开了，两边都开了吧？来听个财报，然后看看这次会不会掐掉啊？然后离财报电话会议开始还有14分钟时间，然后大概就这样的一个布置啊。然后大概就是先把这个关，先把草稿隐藏一下。我也不想弄得太复杂了，因为现在双开的话，操作两边的话就感觉有点操作不过来啊。我也没有做什么太多准备。上一个季度财报，其实我睡过头了，难得错过一个财报。上个季度还是比较有意思的。那这个季度的话，其实来说一下等一下录像没有开，录像没有开。开一个录像吧。开这边录像吧。录像也开一下。我们就听一下特斯拉2023年第一季度的财报啊。那么上一个季度的财报其实是就是睡过头了，错过了，难得错过一次。这个季度其实也是比较有意思啊，就是尤其有意思一点就是特斯拉的降价嘛，在国内其实不光国内啊，在全世界范围内其实都已经掀起了不小的风波啊。国内的话都有车联合说是一个业界存亡危机的那种感觉。就你可以从各个角度去看这次，反正影响还是蛮大的。所以大家其实比较关心的，从几个角度看嘛，一个从特斯拉角度看的话，它牺牲了多少的毛利率，然后来完成这些降价。还有一个就是关心它以后还会不会降价。这个不论是对特斯拉本身而言，还是对整个行业来说的话，其实很多人都蛮关心这个的。主要就是看可能这个就是焦点吧。然后看这边是它的财报的大概内容，等一下我看一下直播这边状态，应该没什么问题吧？这应该人会比较少，所以可能就不一定会看多少评论，可能会的慢一点。这边这个第一个数字呢，就是大家比较关心的一个有关的一个数字啊，11.4%的一个运营的利润啊，利润率。这个利润率的话，上一个季度我看了一下，应该是16%左右啊，应该是降了不少了。降了不少，但是还是一个可以接受的范围啊。我估计空差现在就待会听财报，估计会有这么一个感觉。我可以预测一下，就是我估计特斯拉包括很长一段时间的判断就是这样的，就是觉得现在形势应该是不好的，就是经济形势啊等等各方面应该是属于困难时期，所以他们应该会愿意把这个运营的利润率降到只要是正的，他们应该都是可以接受的。所以这个也是它降价的一个底气相关的内容，就说一下。还有一个就是刚说降价，其实我还是想说一下，就是不要就很多人对特斯拉这个降价来的感觉很意外啊。这完全是没有好好注意特斯拉这个公司的发展了。其实特斯拉从2018年开始啊，它就已经没有把重心放在一个新车的一个怎么说呢，新的车型的一个发展上面。更多是那个时候他就已经在财报时就很明确的说了，他们在布局的就是优化工厂、优化生产线。老马也是多次的在这几年间不断说，特斯拉现在最厉害的产品就是他们的工厂，所以他们对现在的降价，包括之后也会有一些降价等等，他们其实已经布局了很多年了。之前是体现在他们的毛利率上面的，是现在情况一有变的话，他们就可以把它体现出一个降价的降价的底气啊。然后，之前特斯拉其实是有个2年的涨价期间的，那其实反而是异常的，反而是因为供应链问题啊、疫情，还有就是各种特殊时期造成，降价才是就符合他们的发展预期的一个过程吧。但这一波降价其实是有点有点出刀子的感觉啊，就确实他认为形势比较困难，他们愿意去牺牲利益来换取增长。其实这样的话也对行业的其他对手有更强的一个挤压作用。怎么说呢？那个意图也不能说是没有吧，不过主要来说，他们的判断就是，他们要保增长，然后现在的大环境他们觉得不好。就是大概随便看一下。对，降价的话是，你现在都不知道降价吗？ 特斯拉在今年的降价动作很大的，应该是已经有过很多轮降价了。在国内的话，应该是从1月份开始就应该有一轮比较大的降价了。在全世界范围内的话，应该就是有来来回回已经10几波降价了。当然，因为主要是各个地方的次数不一样，但在美国这边本土这边销售应该是有过3、4波的降价了，包括就是上一波降价就应该是在昨天，应该是Model 3的入门款啊又降$2000，就是但 Model S 和 Model X 待会会看，就是会降就特别厉害，所以整体其实是已经有很厉害的降价了。大家都在想的是，就是说降价引起的是多大的一个区别啊？还有一个就是说他们之后还会不会继续降，这是其实是财报的关注重点。然后刚刚看了，这是一个运营的这种利润。其实我在这个财报里面，我本来想去找的是它的一个就汽车部门的毛利率。这个因为是运营的利润率的话，其实扣除了很多就是公司的发工资啊等等，还有就是研发等等各种各样的开销扣除之后的利润啊。所以我其实比较想看毛利率，因为毛利率更能说明它一个降价的一个最基础的一个资本吧。当然这里好像后来是没有分开列出来啊，所以稍微对此有点模糊。然后这些的数字的话，大概都可以看一下，反正依然是一个正向的利润率。这个现金的现金及等价物的增长其实是不是特别多啊，就是只有2000万左右。按照它之前的水准来看，好像有一点低，但是总归是一个正的一个流向。另外，因为要注意一点，就是它今年应该是会对 Cybertruck 进行生产线投产，这其实也是对它来说，其实也是一个束手束脚的一点，因为它保证正的一个利润率的话，那么它现在要开一个新的产品线，其实投资还是会很不少的。所以它降价估计我预测还是会有一点，应该不会太多了，剩下的降价不会太多，但我个人猜的话，应该还是会有一点。这个另外就是说这边的话 ，gross margin 对吧？这个是总的一个利润净利润啊，就是把能源部门行业都算进来之后的。它主要的业务还是汽车，所以这个也是很有参考价值的一个数字啊。这个数字的话，当然还有一点就是降价其实是整个第一季度里面分次发生的嘛，尤其最近的几次其他地方降价的话，幅度还不小，还没有充分反映到整一个季度结果里面啊。如果是单看季度末的话，这个数字应该会更加低，所以就是光看这个数字去判断它的降价底气还是有点，稍微有这么一个偏差在的，因为就是单看季度末的话，这个数字肯定还要更低一些。那么这是扣除运营的一个利润率啊，这两个数字反正就是看一下，你也可以看跟上一个季度对比啊，其实已经有一个很明显下降了。这现在也就是说特斯拉去降价保增量的一个目的已经很明确了。还有一个你可以去看它的总产量的话，产量在哪？产量在下一页里面。你看这里产量的话，其实跟上一个季度相比啊，没有什么太多增长，就基本上是平的。但这一方面来说的话，国内的话春节是有假期，然后国内其实对产量的影响非常大。还有一个是第一季度本来的话就比第4季度的话要短2天啊，这也其实说大不小，也是一个说起来也不算特别小的一个差别。所以这个数字的话还是怎么说呢？就说明其实特斯拉现在不是一个火力全开的一个状态，它按照特斯拉火力全开的增长的话，这个数字应该还会再大一点，所以它可能还是会利用这个时间点的话，另一个需求它稍微弱一点的时候，其实做生产线升级之类的。包括现在有听说 Project Highland 对新版的 Model 3改版，这肯定也是逐步开始布局的。那主要来说的话，肯定还是因为一个春节的影响。其实但是来说的话，这个数字可能也是特斯拉会是有压力的。比如说特斯拉比较最在意的一个就是库存的天数啊，就是说特斯拉是希望它的库存天数比较少啊。你可以看到在过去的1年里，它的库存天数在上涨，这也是可以看出特斯拉有没有一个降价意愿的一个数字啊，就这个数字还没有，当然这个数字也是另外一方面，降价是正在进行当中。这个第一季度末的话，这个数字可能也不对吧？这个应该就是季度末的数字，所以可以看，其实特斯拉从这个数字出发的话，估计还是有降价意愿的。他们降价底气的话是反映在他们的利润率这上面去啊，所以这两个数字你可以综合来看，虽然这两个数字其实都是整个季度平均啊，不对，这个可能是季度末的数字。你可以自己去猜测一下，他们还会不会进一步加倍？我个人的想法是，他们应该还会降一点，但可能今年能降的已经不多了。 大概是这样的一个感觉啊。然后的话，太阳能是比较让人失望，太阳能全降了，而且降的非常之多啊，很明显的一个下降，不知道是有没有一个什么变化。然后能源这边的话，能源储存的话是有一个非常明显的进步啊。这个从去年开始运作那个专门的一个 Mac 工厂之后，其实还是有已经开始发力了。然后这个季度也有个消息是在国内刚刚建了一个 Mac 工厂，对吧？刚开始建，应该在国内也要开始。国内其实特斯拉能源储存业务是基本上是不大有的，在国内刚刚要开展起来，也可以观察一下这块产品在国内的发展情况。大概是我个人觉得就是这些啊。然后柏林、Texas 它的现在产能也可以看一下，已经开始不算小的了，已开始发力了，但跟其他2个相比的话还是比较小。好像也不知道他们这2个厂有没有开始挣钱啊？对，大概是这样。还有一些照片 ，Cybertruck 的这个生产线的话，看上去还是很手工啊，还是非常手工。包括这边是一个实力生产线的，还是在调试当中，其实还是有很多东西没有弄完的。所以 Cybertruck 其实好像说是今年开始是吧？今年应该是产量不大的，即使开始的话产量也不大，可能要等到明年的第1季度可能才正儿八经算是开始，我估计啊。Mac 的工厂，这个是4680电池的生产线的照片，然后这边下面是一些细分的数据，大概是这样。然后离开始还有一会儿，他们可能还会晚个1-2分钟。还有一个的话，我们可以看一下待会儿的提问，这次提问感觉还不错，大家都蛮会提问的。你可以看待会儿第一个投票最高的问题，那么会不会搞一个自动调价系统啊？我估计不大会啊，我感觉调价还是有个不是那么单纯的。调价的话，你还要考虑除了一个单纯的供需关系的话，还是要考一些，因为它这个跟对人的影响蛮大的，所以应该是，我觉得还是应该要有人为决策的。然后就是能源部门的发展的一个意见啊，就是要一些更多的关于能源部门的发展状况。然后这边的话是就利率方面，再说未来展望一下，这些都是其实比较关心的问题啊。这个问题就比较吃瓜群众比较关心，就是4680现阶段和当初的预想相比的话，有没有都达成到了怎样的一个预期情况啊？以后能不能够更好的达成这些预期？其实已经有一些隐含意思在里面了，就是4680是不是有一些东西和预期来相比的话，现在是达不到的？其实反过来说是这么一个意思里面，看能回答多少吧。然后整年的话展望一下，就是利率的这个方面的情况，还有就是如果是现在这个价位的话，那么整年的利率会是这么一个情况，都还是问的比较调皮的这个问题。然后呢是就是整一个全球订单现在是一个什么情况啊？就是就这轮降价之后啊，我估计这2个问题都可能都不会正面回答，我猜啊。然后呢是这边问Cybertruck 的一些更新啊，就是那些给什么，这个可能还是会给一些东西的，说不定啊，看看。然后的话，对 Solar Roof 太阳能屋顶现在是个什么情况啊？对，刚才我跟你说的就是现在这第1季度太阳能有一个很明显的下降啊，可以看一个什么情况？也许是第1季度的话，因为冬季的话就是屋顶安装可能确实是一个淡季，但是也下降的太明显，我感觉还是可能有一些状况，看看他们会不会给一些东西。墨西哥工厂什么时候开始生产？这个也是比较关心的问题。然后呢是特斯拉的保险业务啊，他说最初目标是希望到达80%的用户，就走特斯拉的保险。现在是个什么情况？以后是个什么情况？这问题，那么就是 Tesla Vision 就说是特斯拉视觉这一块啊。 特斯拉视觉现在对那个就是自动停车这里，它的精度和有超声波雷达的时候相比是一个什么样的情况？然后以后会怎么样？大概这方面的问题。然后这边的话是，对，大宗商品的材料变化、涨落等这方面对价格的影响。觉得这些就是对，也是跟大环境相关的一些问题，就是说大宗商品通缩，还在这方面就是对它的在成本方面的影响吧。Can you give us？ 对，就说现在就是根据现在的一个能源情况，能源部门的情况，就整一年的一个能源部门的收入大概做一个展望吧。这些都我刚才还看到特别有意思的问题对这个问题这个就是车主其实非常想问的一个问题，就是说会不会以后特斯拉允许旧车主把他的一个 FSD 的一个软件包从旧车挪到新车上面去了？这个我就蛮尖锐的，这边已经开始了，那我就最有意思的问题看不到了那我就来听了。
VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just a Q1 recap. Model Y became the best-selling vehicle of any kind in Europe and the best-selling non-pickup vehicle in the United States. And this is in spite of a lot of challenges in production and delivery. So it's a huge credit to the Tesla team for achieving these great results. It is worth pointing out that the current macro environment remains uncertain. I don't think I'm telling anyone anything people don't already know, especially with large purchases such as cars. And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. So we do believe we're laying the groundwork here, and then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy. This is an extremely important point. Let's see, regarding the Cybertruck, we continue to build alpha versions of the Cybertruck on our pilot line for testing purposes. It's a great product, and we're completing the installation of the volume production line at Giga Texas, and we're anticipating having a delivery event, a great delivery event, probably in Q3. As with all new products, it'll follow an S curve of, so production starts out slow and then accelerates. So the Cybertruck is no different. So there's a tremendous amount of demand for the product, obviously, and it is, in my view, a fantastic product, a Hall of Famer. But as with all new products, it takes time to get the manufacturing line going, and this is really a very radical product. It's not made in the way that other cars are made. So let's see, with regard to Megapack, we're making great progress. Our energy storage deployment reached nearly 4 gigawatt hours in Q1. It's by far the strongest quarter ever. And this growth was achieved thanks to the ongoing ramp at our Megafactory in Lathrop, California. There's still some way to go to reach the full run rate of 40 gigawatt hours per year. And then we additionally announced the start of a new mega factory in Shanghai. So we're as we've expected, the stationary storage growth actually will significantly exceed the vehicle growth. Regarding autopilot and full self-driving, we've now crossed over 150 million miles driven by full self-driving beta, and this number is growing exponentially. I mean, this is a data advantage that really no one else has. Those who understand AI will understand the importance of data, of training data, and how fundamental that is to achieving an incredible outcome. So, we're also very focused on improving our neural net training capabilities, as it is one of the main limiting factors of achieving full autonomy. So we're continuing to simultaneously make significant purchases of NVIDIA GPUs and also putting a lot of effort into Dojo, which we believe has the potential for an order of magnitude improvement in the cost of training. And Dojo also has the potential to become a sellable service that we would offer to other companies in the same way that Amazon Web Services, offers web services, even though it started out as a bookstore. So I really think that the Dojo potential is very significant. In conclusion, we're taking a view that we want to keep making and selling as many cars as we can. Despite this being an uncertain macro environment, this is a good time to increase our lead further, and we'll continue to invest in growth as fast as possible. Once again, I'd like to give a huge thanks to all Tesla employees worldwide for doing an incredible job again, and super appreciated.
Thank you very much. And Zach has some remarks as well.
Yeah, thanks, Martin. I want to start by congratulating the Tesla team for record vehicle production and deliveries. And I also want to congratulate our energy storage team for record volumes as well. There's three main points I want to make. First, automotive gross margin and operating margin reduced sequentially, but as Elon mentioned, these remain at healthy levels. In particular, automotive gross margin was impacted by a few factors since our discussion on the last earnings call, which include additional action taken in the second half of the quarter to improve vehicle pricing, and one-time items, most notably warranty adjustments on older S and X vehicles, as well as increased deferred revenue for certain autopilot features as we transition technologies. Progress on vehicle cost reduction continued in Q1 with meaningful improvements on logistics and the beginnings of some commodity cost reductions starting to be realized. Per unit costs for Austin and Berlin improved as well, driven by record volumes. However, these factories still provide a margin headwind and will likely continue to do so until after we reach and stabilize at our intended volumes. Note that Q1 was our third quarter in our multi-quarter plan to move to a more regionally balanced mix of build and deliveries. As I've mentioned previously, this results in lower deliveries than production within a quarter due to a higher volume of cars in transit at the end of the quarter, and has an associated impact on quarter-ending free cash flows. This was particularly prevalent in Q1 for S and X as we begin exporting cars for international deliveries. Second, our storage business is starting to take shape, and this is exciting to see after many years of investment and focus. This business is growing as a percentage of the company's revenue and reached its highest level yet in Q1, driven by an increasing rate of deliveries for our Megapack products. We are also making progress on storage profitability, generating our highest gross profit yet in the quarter. Third, I want to reiterate the philosophy by which we are operating the business this year. Our approach is to grow volumes as quickly as possible in both our vehicle and energy businesses. We plan to continue to invest heavily into our future plans, which include the Cybertruck, next generation platform, in-house cell production, energy storage business, and our autonomy and AI-enabled products. And we plan to do this while keeping the business financially healthy and industry leading. To accomplish this, we need to remain focused on cost efficiency and working capital, and in particular, unwinding the strategic inventory buildup left over from the pandemic. I want to conclude by thanking the Tesla team again, as well as thanking our suppliers and our customers.
Thank you very much. And let's go to investor questions on say.com. The first one is, what is the process to make auto pricing adjustments? What variables do you consider? How frequently do you review pricing?
Do you want to take that, Elon, or do you want me to take it?
My apologies, sorry, I was on mute. Yeah, I think this is not something that we can really talk about. It's just we do our best to evaluate the production output, macroeconomic conditions, and we make a decision. But it's unless there's something you'd like to add, Zach.
No, I think that's right. I mean, as a team, we review where we stand globally on a weekly basis, and certainly can't get into the details of the reasons why certain decisions are made. But it is something that's very actively managed by a subset of the leadership team.
Thank you. The second question is, do you still believe Tesla Energy will be bigger than auto? And when will you provide more formal guidance on Megapack and overall Tesla Energy?
Yeah, I should just clarify, like bigger than auto from the standpoint of like total gigawatt hours deployed. So it's possible automotive revenue may be higher, but gigawatt hours I think will be probably higher with stationary storage. If you just look at what's needed to transition the world to a sustainable energy economy, there is more stationary energy storage needed than there is mobile energy storage. So, and we are seeing growth of our stationary storage well in excess of automotive. So that is in line with expectations.
Yeah, and on the guidance part of the question, and maybe Martin, we can combine this with the next question, which is on guidance for margins. Just have a single comment there. You know, I think we will get to the point where we as a company provide guidance on the storage business. I say storage is a combination of both the Megapack business and the Powerwall business. Relative to total revenues of the company, it's still fairly small. And the business has a lot of volatility currently, both in terms of volumes as well as financials, just given the small volumes and kind of diversification of the customer pool there. But as this business grows and smooths out, I don't think we're that far away from it. You know, I think including these volumes on our day 2 production and deliveries release is something that we'll start doing. And then we can talk more formally as a business about our expectations over the coming year. I think it'll be a few more quarters before we get there.
Thank you. The next question, as you said, was already answered. So let's go to the battery question.
Oh, sorry, just one other thing I wanted to mention on margin. You know, while we're not providing specific guidance there, I mean, just to set expectations of where we think this business will go in terms of margins, you know, probably generally in the ballpark of what we've seen historically on the vehicle business. You know, we generally look to mid 20% gross margins for any program that we launch. And so we're not there yet on this business, but that's what we're working towards.
We're hopeful to get there later this year, but that's not a promise, that's an aspiration.
Thank you. The next question is, how well are 4680 cells meeting the expectations described on the battery day? How long will it be until the cells meet those goals? Drew?
Yeah, so on battery day, we established a cost down roadmap through 2026 across 5 areas of effort. There was the cell design we discussed, anode and cathode materials, the structural pack concept, and the cell factory itself. And we've been making progress across all these aspects since then. For the cell factory, the Texas 4680 factory, we are partway through building and commissioning and installing and operating. Will be 70% lower capex per gigawatt hour than typical cell factories when fully ramped, in line with what we described on battery day. And we're continuing to further pursue densification and investment reduction opportunities in future factory buildouts like in Nevada. On the cell design, we're in production with not only the first generation tablet cell we unveiled on battery day, but a second, more manufacturable version in Texas today. On the cathode material side, we have a number of activities underway per the battery day roadmap. For lithium, our Corpus Christi lithium refinery breaks ground this May. Our goal is to start commissioning portions of the facility before the end of the year. The refinery uses the sulfate-free spodumene refining process with reduced process cost, no acid or caustic reagents, lower embodied energy, and actually produces a beneficial byproduct that can be repurposed in construction materials. We discussed all of these concepts on Battery Day. Same with cathode precursor. We've successfully demonstrated a lower process cost, zero wastewater precursor process that we described on Battery Day at both lab and pilot scale, and are in the detailed design phase for incorporating this technology into the front end of our Austin cathode facility. On cathode production, we are 50% equipment and 75% utilities installed at our new cathode building in Austin, with our goal to begin dry and wet commissioning this quarter and next quarter, with a target to produce first material before the end of the year. Structural pack, we saw big improvements with pack manufacturing with the 4680 cell and the structural pack concept, 50% lower capex and 66% smaller factory for the same output in gigawatt hours per year. You know, we do believe structural as a concept is a good one. It's simpler. We'll continue to structurally load the cells and use the pack as the floor of the vehicle, while iterating the design to closer to B-level execution of this A-level architecture in future programs. And zooming out for the 4680 team, Q1 was all about cost and quality. We made significant improvements in both areas. In Texas, production increased 50% quarter over quarter. Through yields increased 12%, and Cato peak rate increased by 20%, and through yields improved by 20%. Altogether, the team accomplished a 25% reduction in COGS over the quarter, and we are on track to achieve steady state cost targets over the next 12 months. And going forward for the rest of the year, the priority one is yielding cost for the 4680 program as we steadily ramp production ahead of Cybertruck next year.
Thank you very much. The next question is, what do you anticipate 2023 automotive gross margins ex credits will be at the company's current pricing levels?
Yeah, I can start off on this one. You know, this is a difficult environment to make a projection like this. You know, there's a lot of macro uncertainty. There's also headwinds and tailwinds. And, you know, this is basically a question I think that's asking about our viewpoint on where costs will go. And within costs, there's a set of costs in which we do control, a set of costs in which we're kind of subject to what's going on in the macro world. You know, within the bucket of things we control, you know, the most of the cost down that we're working on is around ramping our Austin factory, stabilizing that, and then doing the cost optimization work once we get to our intended volumes there. And a part of the cost journey in the Austin factory is, as Drew mentioned, the 4680 cell, which is an input into our Austin COGS. And so, you know, as the 4680 program improves over the course of the year on cost, as Drew mentioned, and then the non-cell portion of the factory improves, you know, we see a pretty good trajectory in the Austin facility. A similar story exists in the Berlin factory. It does not have 4680 as an input, but for that factory, the journey to complete localization is still ongoing. And so over the course of this year, as volume increases, more localization occurs, you know, we do see a good path to cost reduction in the Berlin factory as well. In existing factories too, we talk about this on every call, so I don't need to rehash it, but you know, the expectation is that every existing factory improves all of their key metrics, and we continue to see the progress there. You know, there's also a handful of other costs in which we have influence, but you know, the philosophy here is that we're aggressively going across every cost bucket that we can. Within the world that we don't control, you know, the two major costs there being logistics, which fortunately is moving in our favor. And I think our supply chain team has done a great job both on logistics optimization and taking advantage of reduced spot rates where they can. So thank you to our supply chain team. And then there's the commodities world, which has been a huge page point in our cost structure over the last, say, 2 years or so. And we're still kind of at the maximum of pain for commodities in our cost structure. It kind of maxed out in the second half of last year. We did start to see in Q1 a little bit of improvement. We think there'll be a little bit more improvement in Q2. But
lithium has dropped a lot. It's worth mentioning that the price of lithium has dropped significantly.
Yeah, and that's the piece that we expect to see more impact from in Q2. And generally, as a company, we do expect commodity prices to come down and have a more meaningful impact in the second half of the year.
Yeah.
So, this is our approach. How that nets out, I mean, just a lot of risk, and we'll have to see how the year progresses.
Thank you. The next question is, how has global order intake tracked since the most recent round of price cuts?
I think the overall thing we can say is that orders are in excess of production.
Thank you. And maybe the last question from investors. Can you give updated specs and pricing for Cybertruck and any new features that will make it to production?
Well, I think we'll save that for the Cybertruck handover, which will hopefully be around the end of Q3 this year. And one thing I am confident of saying is that it's an incredible product. It's a Hall of Famer, I think. And a product like this only comes along once in a long while. So people will not be disappointed at all. It's amazing.
Great. Thank you very much. And let's go to analyst questions. We'll start with Alex Potter from Piper Sandler. Alex, go ahead and unmute.
Can you hear me?
Yep.
Yes.
Okay, perfect. So first question was on Lathrop. Obviously, it's great to see the growth there. Just wondering when you think that facility might be closer to full utilization. Are you just sort of deliberately working your way up the S curve there? Demand obviously isn't the limitation. So what are the steps, I guess, to unlocking full utilization there?
Sure. There are some classic, factory ramp aspects of what's going on in Lathrop. We actually had 2 phases of the capex there. We phased some of the general assembly parts of the facility, but in addition, we also have ramps with our suppliers that we are following. So both on the cell side and on the power electronics side, and we will see that unlock in the latter half of this year with both those inputs. So the overall facility was phased, with the second phase of capex coming online towards the end of this year.
Okay, great. And then I guess my second question is on your ability to serve other markets out of Shanghai. Obviously, the facility in Berlin should be opening up your ability to, I guess, allocate more vehicles to Southeast Asia, Australia, other areas. I'm just wondering what other regions you think you're maybe not yet serving effectively. What are your timelines for addressing some of those gaps in your regional exposure? Thanks.
Yeah, that's a good question, because there are still many parts of the world that we do not yet serve, with respect to vehicles especially. So we do expect to open up new markets around the world. And while those markets are not necessarily individually gigantic, they do add up to, if you add up a whole bunch of markets, they do collectively sum up to something significant. So it's high time that Tesla offered its cars to the rest of the world, and that is something that we intend to do.
Okay. Thank you very much. Let's go to the next analyst, George from Canaccord. Go ahead and unmute.
Hi, thanks for taking my question. I was wondering first if you could discuss your FSD take rates and whether you've seen any significant positive or negative change there. And also, given that you've reduced the prices for your vehicles, do you think you need to do that for FSD as well? Thanks.
Well, I'll decline to answer the details on the FSD take rate, but it's a tricky pricing question, because the value of a car that is autonomous is enormous. So in a way, the price right now is an option value on an autonomous vehicle, and that value is that will ultimately be very, very significant. And it's really yeah. I mean, for those that are using the FSD beta, I think you can see the improvements are really quite dramatic. there'll be a little bit of 2 steps forward, 1 step back between releases, and for those trying the beta. But the trend is very clearly towards full self-driving, towards full autonomy, and I hesitate to say this, but I think we'll do it this year. So that's what it looks like. Yeah.
Thank you. Maybe on the dramatic change we've seen in EV-related commodity prices, do you think that's a reflection of any recent overcapacity in mining and refining, or is that sort of a coincident indicator on global EV demand? And how do you expect those prices to kind of track over the next several quarters? Thank you.
Man, I wish I had a crystal ball to answer your question. I don't know if we can provide a question that would that would have any value, really. I think we're in uncertain times, and if somebody's got a crystal ball they can lend me, I'd really like to borrow it. But these are uncertain times. My guess is it's economic stormy weather for about a year or so, and then roughly 12 months, and then this is my guess. It's just pure speculation. Stormy weather for about 12 months, and then provided there are no major geopolitical wild cards that show up, things start getting sunny around spring next year.
The only thing I would say on the EV materials markets, they're not all super liquid, and some of them, for example, less than single-digit percentage of the market is actually traded on the spot market. So, and not only are they not super liquid, there's not storage isn't particularly facile for all of the materials. So small mismatches in supply and demand drive large price swings, not really real price swings, but just temporarily large price swings. So it's hard to read into those price swings. I don't know, Karn, if you want to add anything.
Well, but this is Karn, by the way. We are seeing, as Elon mentioned, quite a bit of softening in the lithium carbonate market. This was, 6 months ago, we were trading at $85,000 a ton, and today's spot price is about 26. So there's been a dramatic decrease in that. Of course, we were able to take advantage of low lithium pricing earlier on with fixed price contracts, and we find that this is going to be another opportune moment to basically extend that into the later half of the decade. But we at the quantities we're procuring, we're not as impacted by the spot market because we have those contracts in place, and we're just going to be going and doing more of that. The other thing that's happening is because of the price spike, a lot of the companies that are in this business are becoming more ambitious about finding more upstream resources and exploring locations in Africa as well as South America. So that's also helping the macro situation with pricing.
Yeah.
But just on the lithium front, to emphasize the choke point is much more on refining capacity than it is on mining. Lithium is actually is very common throughout the world, including in the U.S. and really in every it's just a very common element on Earth is lithium. So it's much more a question of where's the refining capacity, and can the refining capacity keep up? That's really what matters more than where is the lithium ore. It's everywhere basically. I think that same question also extends to refining of the cathode, and to some degree refining of the anode. And this is why we've at Tesla we're building our lithium refinery capability at Corpus Christi, and our cathode refinery outside Austin. It's worth noting, I hope other companies do the same thing. We'll have by far the most lithium refining capability and the most cathode refining capability in North America. I think probably more than everyone else combined, by a lot. So can other people please do this work? That would be great. We're begging you. we don't want to do it. You know, can someone please, like, instead of making a picture sharing app, please refine lithium mining and refining. Heavy industry, come on.
It's fun. It's actually fun.
Yeah, exactly. It's real.
You have a customer. We're here, ready to buy.
Yeah, that's
right. I just want to emphasize, Tesla's not doing this because we want to do it. We have a lot of fish to fry, obviously, but we're doing it because others aren't doing it, and we wish others would do it.
Awesome. Thank you very much. Let's go to Emmanuel Rosner from Deutsche Bank. Hey, Emmanuel, can you hear me? Yeah, we can.
Yep. Perfect. Thank you so much for taking my question. Maybe a first question for Elon on your pricing strategy. So if I understand your message, you're saying, Tesla feels it's worth maximizing the volume, increasing the size of the fleet as fast as you can, because you'll be able to monetize this over the life cycle of the vehicle. Can you be a little bit more specific around ways you would be able to monetize sort of like this existing fleet in the future? Obviously, I think autonomous seems to be a big piece of it. By my understanding was that robotaxi would probably be for the next generation vehicle, not the existing one. So I guess in which ways would you monetize it?
Sorry, the robotaxi terminology can be a bit confusing because that's sort of like a generic term for our next generation vehicle. And we obviously are working on next generation vehicle. It's going to be very compelling. This is just not the time to talk about it in detail as a product. So we internally call it robotaxi, but really all of the vehicles that have hardware 3, which is the vast majority of our fleet, we believe will achieve full autonomy. So there will be like a Model 3 or Model Y would be a robotaxi, a robotic taxi. So yeah, that's to the best of my knowledge that we believe the current hardware can achieve full autonomy.
Understood. And then maybe a question for Zach, back on the automotive gross margin. So I guess a few months ago, even after major price cuts, you felt pretty strongly that 20% automotive gross margin was still probably a reasonable floor. Obviously, the macro has gone worse, and additional price cuts have happened. Is there anything else that has changed in terms of the outlook? Is it just the macro deteriorating? Is it the competitive landscape? Anything else that sort of like makes you think differently around the full year? And is there a way therefore to frame a floor?
Yeah, about half of the miss against that previous conversation last quarter is attributed to adjustments we made in pricing in the second half of the quarter. I guess you could argue that lowers the floor in a sense. We've also made pricing adjustments so far this quarter, so that brings it down further. About the other half of the miss in Q1 was attributed to things that are non-recurring. So I mentioned these in my opening remarks. It's a warranty adjustment for cars that were previously produced, but not part of the pedigree of cars we're building now. And some autopilot-related deferrals as we make some technology changes here that those deferrals should get recognized once some of the software catches up. So those two things are non-repeating. So hopefully that helps answer your question.
Yeah, there's really two macro factors that are tricky. The biggest being the interest rate. So if there's a very high Fed rate or interest rates are very high, that is every time that the Fed raises interest rates, that's equivalent to increasing the price of a car. It makes the cars less affordable because people are able to buy cars as a function of what they can afford on a monthly basis. So it's just almost directly equivalent to a price increase is any kind of interest rate increase. Then the other factor is whenever there's uncertainty in the economy, people will generally postpone big new capital purchases like a new car. This is a natural human reaction. So if people are reading about layoffs and whatnot in the press, they're like, well, they might be worried about they might be laid off, so then they'll be naturally a little more hesitant than they would otherwise be to buy a new car. Now this is just the nature of the auto industry. But there will be a tremendous amount of pent up demand for new cars. So, but it goes through cycles.
Thank you. Let's go to Ben Kalo from Baird. Ben, go ahead and unmute.
Hey guys, Elon, when you talk about many fish to fry, you talked about Dojo being a product that you can sell outside of Tesla. How do we rank all the things you have going on, and then in the economic environment? I mean, like heat pumps and everything else you have going on versus investing in the vehicle business, or is that not the right way to look at it?
I'm not sure I fully understand your question, but I'd look at Dojo as like kind of a long shot bet. But if it's a long shot bet that pays off, it'll pay off in a very, very big way. But potentially, potentially in a very, very big way. Like, in the multi-$100-billion level. But the thing with still put it in the long shot category, but long shot with a multi-$100-billion potential outcome. And so it's a bet worth making, but not one you can sort of say like, oh, take it to the bank type of thing. Although these days, take it to the bank, it's maybe not as secure as it used to be. And obviously we're big believers in heat pumps, and that is on our list that, over time is to do a really good heat pump for homes and, commercial offices and stuff. And we have the technology, it's really good. But it's a back burner item. Our focus is very much on vehicles, autonomy, stationary storage, basically solving sustainable energy and solving autonomy, which would be like I said, solving autonomy. If we're able to have a fleet of several million vehicles that, with a software update, can be potentially worth several times their original value, that will be, if that happens, that will be and I think it will happen. That'll be the biggest asset value increase in history, I think.
Thank you, Bob. Just on pricing, a lot of pundits talk about the pie and losing share or gaining share, but how do you guys look at pricing versus the EVs or the ICE vehicles, or does that not come into the equation? Sorry to ask about pricing again.
What?
Thank you.
No, it's really just like, every day we get a daily real-time update of how many cars were ordered yesterday, how many cars were produced yesterday. We must have, if there's a company that's got more real-time data than Tesla, I'm not sure there's any company on earth that has better real-time data than Tesla, except maybe SpaceX, Starlink. So, because we don't have to, for the other car companies, they will make the cars, send them to the dealers, then the dealers will sell the cars, and and then it takes quite a long time for them to get the data back to actually figure out how many cars were sold. Whereas we know how many cars were ordered yesterday throughout the world. So our fingers on the pulse is real time and does not have latency, whereas the other car companies have a lot of latency in their data, as does the government. The government has a lot of latency in their data. So we're just looking at and saying, okay, what does it take to achieve a clearing price for our vehicle production? And then we make a pricing change and we see what happens immediately. and adjust course. So we're adjusting course, and we're thinking about it literally every day, 7 days a week. Every 7 days a week, I look at that email, and so does the rest of the team. And we try to make the least dumb decision that we can. You know, and on balance, I think our decisions are pretty good. You know, sometimes they'll be, you know, dumb, but on average, they're, I think, better than the rest of the industry.
Just to add on the question about EV market share or ICE, this comes up a lot. I think a lot of the public debate is around this concept of EV market share. You know, we don't look at it that way. I mean, we look at it as market share of cars. It's the car market, not the EV market. And actually, the mission of the company requires internal combustion engine cars to be switched over to electric vehicles. So that's what we pay attention to.
Yeah, I've said that last time too. You guys got to stop looking at it as the EV BEV market. It's how many cars are we selling? Just start looking at it that way.
All cars will be EVs. It's you know, it's gonna. You know, I've said this for a long time. We'll look back. I don't know, assuming civilization's still around in 20 years. We'll look back on internal combustion engine vehicles the same way we look back on external combustion engine vehicles, which like a steam engine. A steam engine is an external combustion engine vehicle. And, you know, there's still a few around. They're kind of quirky and, you know, kind of cool collector's items. That's how gasoline cars will be in the future.
Thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Can you talk a little bit about how much of the actual cost structure is variable, you know, on these vehicles, and if you could give us a range on plus or minus the lithium cost within those contracted volumes that you're seeing?
Well, I think you have to. Again, we'd really love to have a crystal ball here, but we don't have it. Depending on what time scale you're looking at, most of the car is variable. So most of the car cost is variable. So, and probably, if I were to guess, I think we will see improved costs from suppliers. You know, yeah, I think we will.
Yeah.
That's our expectation.
Yep, and we're already starting to see that. Elon, I think you mentioned before that we anticipated a crash in the lithium prices, and some of that has flowed through by way of lithium carbonate reductions into battery cost. And the same thing will happen with lithium hydroxide. The length of the supply chain matters also, because what we're talking about is very far upstream. So by the time it makes it into the battery that ends up in a car, it'll be several months. But beyond just the commodity pricing, as Zach mentioned earlier, we're also very focused on other metrics that make production very efficient. So, for example, detention and demurrage, air expedites. I think our air expedites are down 90%. Detention and demurrage is down 93% from the peaks. That can be hundreds of thousands of dollars per vehicle. So we're sort of attacking all vectors and becoming very efficient.
Okay, and then my follow-up is really around stationary storage demand on the utility scale. I mean, obviously there's a gigantic queue for interconnection in the U.S. And can you talk about the volume of quotation you're seeing at this point around stationary storage for that renewables queue on a global basis, and how much of that is converting into actual sales?
Drew, you want to take that?
I mean, I don't. That's also not exactly how we look at it, really. We're not we're not engaged in the interconnection queue. Like, we're focused on ramping Megapack as quickly and efficiently as we can, and we have visibility into the pipelines of a variety of different renewable energy and just pure stationary storage developers, and we also develop our own projects. And we're mostly just we're being selective and trying to pick the projects that best fit our mission and our objectives.
Yeah, this is not a product call, but we'll have something. I mean, we're making improvements on many fronts, including Megapack. So I think some of those improvements will improve the speed at which you can connect the Megapacks to the grid.
Thank you. The next question is from Mark Delaney from Goldman Sachs.
Yes, good afternoon. Thank you for taking the question. Do you still see 2 million units as an upside case for volume this year? And is the gating factor for reaching 1.8 million or 2 million units in 2023 still supply chain, as was mentioned on your last conference call, or is it more about demand at this point?
Well, you know, if you have a crystal ball, you can lend me back to the crystal ball situation. These are volatile times. From a production standpoint, if things go well, we've got a shot at 2 million vehicles this year, but that is the upside case, and we feel comfortable with 1.8, and we'll just have to see how this year unfolds.
That's helpful, thanks. And then the company has spoken at the Investor Day and in some of the past conference calls about opening up its vehicle charging network. Can you speak to some of the feedback you've been getting from both Tesla owners and non-Tesla owners, and how the ramp of the charging network may progress from here? Thanks.
Drew, you want to take that?
Yeah. So as you may have seen, we opened our first V4 post in Europe and our Magic Dock post in North America in Q1. And that is, indicative of the direction we're heading with, universal compatibility for all vehicles of, no matter where the charge port is, et cetera, in all major markets. And we're going to continue to roll out those sort of improved offerings as we build new stations. We're always balancing like our ability to serve our own customers with our ability to serve new customers when doing that. I think we've been able to balance it rather well. For example, in Europe, 50% of all of our supercharging stations are open to all EVs, and we've been able to do that without any increase in wait times at all for anybody. So we're going to continue to take a similar approach as we do this in North America and China over the coming quarters.
Okay, thank you very much. Let's go to Rod Lache from Wolfe Research.
Hi, everybody. I just wanted to first just follow up on your comments in your letter about leveraging your cost position as others struggle with unit economics, and also taking into account the lifetime revenue, actually in a way that most other automakers will never see, just given your service network and supercharging and other attributes. Can you just maybe give us a sense of how far you'd be willing to take this? Are there brackets around the range of initial margin that you'd be comfortable with? And again, any color that you might provide on the updated range of margins that you'd expect in the auto business?
I think we may have answered this question or tried to answer this question a few times, but it's difficult to say what the margin will be. It depends on what the macroeconomic environment is like, So, for example, if the Fed were to lower the rates, that would be super helpful for demand. If they raise them, that's that just raises the interest cost that buyers have to pay to buy a car, so it reduces affordability and therefore reduces demand. So it's, but if we look past, say, this year, or like go sometime next year, middle of next year or something, I think things are looking really, I think, like I said, all bets are off if there's some major geopolitical wild card that turns up. But in the absence of that, I think I would be very optimistic about middle of next year, end of next year.
Yeah, and just to add to Elon's comments, just two other points. What's really important for us this year, in addition to just managing the day-to-day of the business, but is also investing in, as Elon mentions, what 2024 and 2025 will look like. And so, using the cash generated from the sale of products today and reinvesting that, this is very important for us. I think that what happens to margins over the next couple of quarters only matters in the context of what that means for our ability to reinvest into 2024 and 2025. And we have a lot of space. before that becomes something that we have to revisit our investment plans. And so, we're planning to keep the business healthy, but I just want to caution folks about reading too much into what happens over the near term here, because we're very focused as a company on making sure that when we exit this macroeconomic situation, this company is positioned in the best possible way.
Yeah, exactly.
Just to elaborate on that point, though, the revenue, the long-term lifetime revenue that you're targeting from each vehicle is massive. So if you took that to the extreme, it would seem that you'd be comfortable with a relatively low initial margin. Am I
correct?
Misinterpreting that, or is that exactly right? And just
that is exactly right.
Okay. And the normally in a recession, when consumers feel less financially secure, actually price elasticity deteriorates. Just based on your pulse taking of the consumer, do you have a view on elasticity of demand?
Well, I can't emphasize enough the whole just fundamental question of affordability. For most people, their ability to buy a car is a function of can they make the monthly payment or not. And so like I said, if interest rates are really high like they are right now, then in some cases people can't get a loan at all. So it's and I think probably banks are pretty not leaning forward in providing loans. I expect these days. So so that's but like there is quite a powerful story here when you going back to something that was alluded to a moment ago, or mentioned a moment ago, that Tesla is in a uniquely strong strategic position, because we're the only ones making cars that technically we could sell for zero profit for now, and then yield actually tremendous economics in the future, but through autonomy. No one else can do that. I'm not sure how many people will appreciate the profundity of what I've just said, but it is extremely significant.
Thank you. Let's go to Adam Jonas from Morgan Stanley.
I'm not sure about that. Hiya.
Hi, everybody. So first, Elon, good luck with tomorrow's launch at Boca Chica. Break away.
We definitely can't have too much luck in the rocket business, that's for sure.
That's incredible. So now that you've gotten to know the Twitter architecture kind of intimately well over the past 6 months, what can you tell Tesla stakeholders about how an X.com or super app could be potentially accelerative to Tesla's business model?
Well, I don't know. I guess it could make it potentially make it easier to buy cars. But we are straying somewhat off topic here because this is
okay.
Tesla.
All right.
Do I think there's some benefit? I think probably there's some benefit. Yeah.
I get it, Elon. So just as a follow-up on manufacturing, you're a student of history, and you'll know that back in 1913, Henry Ford introduced the moving assembly line in Highland Park, Michigan, and the price of a Model T, which had already, been undercutting cars around the time, fell another 70 or 80%, and hundreds of rival car companies went bust.
Yeah.
I'm wondering if history is repeating itself here, Elon, and that the recent pattern of cuts with you is way ahead of the cost curve compared to competition, or is this? It seems like it's a calculated strategy, not just in reaction to competition or changing supply demand in the market, but could we catalyze some Darwinian forces in the EV market?
Well, I mean, we're not trying to say take pricing actions in order to be deliberately undermine competitors or anything like that. We really don't think about competitors that much. We just look at, do people like our cars? How can we make the product better? can they afford our cars? And you know, the sort of the things like improving service and whatnot. But like I said, we do have this unique strategic advantage that we have we're making a car that if autonomy pans out, and we think it will, where that asset is actually will be worth a hell of a lot more in the future than it is now. So it is technically possible to sell it at zero profit, but still have the net present value of future cash flows associated with that asset be very significant.
Yeah. And service and charging and insurance and all of these other ongoing revenue streams that other companies don't have.
Yeah.
Certainly, we want all EVs to succeed too. We just want to say that we're not in like some malicious attack to try to just crush everybody.
Definitely not. We're like opening up superchargers. We've made our patents available for free. So it's like we're trying to be helpful here, you know. So we're not out to destroy competitors or anything like that. We're trying to help competitors, frankly, in any way that we can.
Thank you. Let's go to Dan Levi from Barclays.
Hi, good evening. Thank you. First question, you're ramping supply at Austin and Berlin, so wanted to understand just how critical it is to further increase volume at those plants just to get the vertical integration benefits in the face of the sort of market with some demand questions. And just broadly, should we I mean, historically, you've been operating at the pace at which your supply allows you to produce as opposed to gauging to demand. Should we generally expect that you're going to continue to produce at your whatever the max capacity that you're allowed within your supply constraints, regardless of what the broader economic environment is, just to continue to get that volume out there?
That is, yes. I mean, there could be like obviously a macro shock that is so severe that people just stop buying cars for some reason. But in the absence of that, we will continue to grow output at a rapid clip.
Great, thank you. And then just on the margins associated with Austin and Berlin, you mentioned Austin and Berlin have a margin drag until you reach intended volumes. I don't know if you can disclose what those volumes are. Then maybe you could just remind us of what the margin profile of Austin and Berlin will look like versus Shanghai once you get the vertical integration benefits in place.
Well, probably won't have be quite as good as Shanghai. Is hard to has a very efficient cost structure. Obviously our lowest cost structure in the world. But we do expect to be make significant improvements in Austin and Berlin, and continue to make improvements in Fremont as well. So yeah,
we've increased, this is Roshan Bhai, we increased our localization efforts, so that will then drive down our days on hand requirements. We've made 10% quarter-over-quarter improvement in days on hand. So we'll continue that path as the localization improves.
Okay, thank you very much. And our final question comes from Philippe Houchois from Jefferies.
Yes, good evening. Thanks for taking the question. It's slightly longer term. I completely agree with your comments that we should look at Tesla in terms of auto market share, not EV market share. But I'm just wondering, as you build up the market share globally, is there a limit to the direct selling business model as you practice it? And should we think about going forward, you need to look into the agency or using importers to basically develop market share more smoothly, I guess, globally? And so in other words, is there kind of a sell by date for the direct business model as you practice it today?
It seems to be working well so far.
Because we hear different feedback from customers who miss the human interaction or unhappy with the service, and I'm just wondering if you're seeing some growth pains in there that would lead you to change. You're not seeing that.
Well, I mean, there are, since we're always going to have some growing pains where at times, and it depends on which geography we're talking about, where sometimes service is behind sales, sometimes it's ahead of sales. You know, this is, I mean, Tesla's growing, I believe, faster than any company in history that makes a large, complex manufactured object. So, you know, these are, if you're trying to max, it's always difficult to match exponentials. But I think it is helpful to have the feedback loop with service, because that means we feel the pain of service, and then we can adjust the design to make the car need less service. And I think that gives us the right incentive structure, like, because the best service is no service. The car doesn't break. And, you know, whereas if you have, say, a dealer network that is reliant upon service as a revenue, then you arguably have a misalignment of incentives, where they you know, they're making money on service, but actually we want to, you know, the best thing for the consumer is the car doesn't need servicing. So.
Yeah. And on that front, if I can follow up, have you worked out, I mean, for many of your traditional competitors, a fair amount of profits for them comes from selling spare parts and servicing. And you don't have that in your profit structure. And have you worked out how much of a deficit you have compared to your peers?
Yeah, actually, I mean, this one's something I could wax on about for a while, because really people didn't understand that the best short-selling argument against Tesla for the longest time was the fact that Tesla does not have an existing fleet, and that the auto industry, the reason incumbents succeed and newcomers fail, the biggest reason is that the incumbents have a large fleet, and they're able to sell new cars at close to zero margin, and then sell spare parts at a very high margin, sort of, you know, razors and blades type thing. And so the only way to actually succeed, for a newcomer to succeed, is to have a product that is so compelling that people are willing to pay a premium over the incumbent product. And in the absence of electrification and autonomy, I don't think a newcomer can succeed.
Thank you very much, everyone. Unfortunately, that's all the time we have for this quarter. We'll see you again in 3 months from now. Thank you.
看完了 ，OK。有点疲了，有点疲乏了。我们来稍微大概的总结一下吧，应该不会做太多的过太多内容，就是先说一下，我之前本来想过问题的时候提后面有几个问题比较有意思，但其实没有轮到那几个问题啊。好像有看到，大众商品问了很多的这个自家包能不能转移到新车上面这个问题，没有轮到，不然会比较有意思。这个也很有意思啊！特斯拉以后如果 SpaceX IPO 的话，当指的应该是新量，特斯拉股东能不能拿到优先获取权啊？这个很好玩，反正问了他们肯定也不会答的。对，然后还有后面有几个重复的问题，我比较关心的就是那个 Cybertruck 会不会用他们用的一个新的就是车辆组装方式，就是他上次那个在投资者日里面提那个就是分布组装的一个分布建造的一个方式，这个好像有2个问题是重复的，但没有轮到这个问题啊，比较可惜，反正就没有答嘛。然后大概回顾一下这次的财报啊，就扫扫笔记啊，看一下啊。反正有一个大的印象，应该就是他们还是就是没有，这和我们预期的一样啊，就是甚至是比我想的还要略微激进一点，就是明确的就策略，接下来一段时间策略就是要保增长啊，保增长，利润无所谓了，我们这个对吧？降价的恐惧还在持续当中，简单来说 对对买车的人来说的话，对无所谓的，你们越便宜越好，越卷越好。对行业来说啊，这个特斯拉这把刀还得再砍，还得再来2刀这种感觉啊。对，就是这句话。这个时期是困难的，对，但是好像也是个很大的机会啊。然后后面有一个问题，一直在讲，我真的不是想把竞争对手给搞死啊，我只是在搞自己的业务。但今年他们再搞下去，或者说大环境本来也不好，然后他们又在降价，又搞得大家都在降价，我估计今年确实车企很有可能会死一批啊，财务状况不好的可能会死一批。然后或者苟延残喘到明年，但是今明2年我估计真的要倒掉非常多的车企啊，这个其实是可以预见的。然后这几个问题没有多讲，对吧？所以它的策略其实还是很有战略性的，这个不是一个单纯的算法问题，这个后来其实是有体现的。能源部门确实在发力了，能源部门应该逐渐成为亮点。这次好多能源相关的问题啊，对吧？然后4680的话，让我想一下，就是他们提应该是它这 Zack 给内容太快了，就没有听到太多内容，没有听清楚太多的内容。反正应该这可能是一个比较确切的内容，就是可能正儿八经的要12个月内才是左右成为一个相对来说比较进入正轨的一个步调吧。但这块我听得不是很清楚啊。大环境的复杂，对吧？供应链相关问题，这个也是经常有人现在看来也就是大家很关心这个问题。后续的电话现场提问也有很多跟这个相关的问题。就是产能和订单关系，老马这个等于是含糊过去了这个问题。Cybertruck 的详细内容到时候交车的活动的时候可能再讲。然后这里有一个比较大的爆点这个是没有想到了，就是这个老马松口松的非常厉害，就是 FSD 可能今年会降价，老马说了，老马直接松口了，这个应该是这个是这是劈了个大雷啊，这个没有想到，从道理上应该也说通，因为 FSD 他们确实希望大规模推广了，对吧？另外一方面，老实说 FSD 确实他们太贵了，太过分了，这个价格。这个其实很多人，当然这个有主观的判断在里面，对吧？到底贵不贵，这个有点主观的判断。但我估计很多人应该是会倾向于认为 FSD 现在价格确实有点太贵了。而且之前 FSD 不断的涨价，这个价格翻了个番还多一点啊。主要是有种是在卖焦虑策略的感觉，就说你们再不买，我以后还会涨价的，快点给我买。但其实还是有一个希望大家更多人去买 FSD 这么一个背后的动机在里面。这种策略我觉得应该走不远，肯定是走不长的。肯定还是要回到一个合理的定价，就是性价比，就是定价和回报的一个对比上面来。FSD 现在应该确实是偏贵的。那么老马应该松口了，会降价，那可能是宣告那么焦虑策略的一个终始啊，也许吧，也不搞那个 FSD 焦虑策略，可能做一个更合适一个定价策略。所以这个是应该是一个很不一样的一个感觉啊。大宗商品供应这方面是很难预测未来定价策略。20%毛利底线，那这个就是说以前财报时候应该说就我们一般都会应该会保证最低20%的车的毛利率啊。现在是不是不一样了啊？这边松口了，然后后来这边就是等于是已经松口了，对吧？就说现在反正优先保证产量嘛。到后来就后续几个问题当中就爆出更加危险的一个信号了，就是说我们可以老马强调，就是后面会有嘛，就是老马强调就是特斯拉的一个优势啊。我们可以不赚钱来卖车，其实很多车企都可以不赚钱来卖车。我觉得我不是很同意老马这句话。其实很多车企都是在赔钱卖车，但他其实想说的是，应该是就是说，特斯拉手上现在现金多，现在是真的是有非常多的钱。 他们如果不赚钱去运营的话，他们可以撑个10年都没有问题。现在他们现金状况，而且还可以继续做新产品投资。他们手上底气好，这是他想强调的问题。而现在大环境不好，然后很多车企手上的财务状况也不好。现在特斯拉财务状况的话，确实是在车企当中应该是独一档存在了，就是这个没有什么太大争议。就手上有那么多现金的车企的话，就是也手上基本上没有债务，这个基本上到其他地方去的话，哪有这种车企啊？这些车企很多都是被债务快要压垮的状态。大环境又不好的话，其实是比较难搞价格战的。但它这个还不算价格战，因为他们还在挣钱。但是如果他真的搞零利率卖车的话，就不赚钱的卖车，那就是妥妥的价格战。觉得他们不怕打价格战，他这句话就放出来了，对吧？这就蛮恐怖，就对，可能对行业来说是一个蛮恐怖的事情。这边其实就是很杂的一个问题，无所谓。然后，这个也是老生常谈的问题，这些都不重要，这也不重要啊。这个好像也没有看特别明白。年产今年还是说是有应该可以，有机会200万车产量。这个无所谓其实。但也比较这个比较标题党比较关注啊，就是年产量的问题。对，这个就是他后来就是变了一个调啦，所以说他就说这问这个毛利率底线又重新问这个问题，上面也问了嘛，对吧？这边又问了一下，然后这边说你的意思是不是啊？利率很低也没问题，对，就完全这个意思，老板就直接承认了，后面就对，那这边又变了，就直接冒出来就说我们可以啊不赚钱卖车，这句话恐怖嘛？这句话非常之恐怖的，这句话你看这句话讲出来就说这个其实就是我跟这次财报刚开始也在说，就说现在特斯拉这波降价引起的这所谓的价格战和行业的一个非常痛苦的时期，但不光是一个是本来大环境就不好，再加上这边又开始一种降价风波了，所以大家日子都很难过的。所以其实大家不光是关心特斯拉的一个现在赚多少钱，更关心的就是他们你的底线在哪里，你还能降多少钱，对吧？这句话冒出来，对吧？这个就是要发抖了，这可能大家都要发一下。然后从消费者的角度来讲的话，就说等党，说不定还是真的可以等的。这句话放出来，之前是财报前，我还是觉得，特斯拉今年降价的话，估计还会降，但不会降太多。他这句话放出来，我就觉得他如果有需要，他甚至还可以降很多价可以降个10%、20%价格都有可能。可能20%说过了，可今年再降一个10%左右的价格是完全有可能的。就这按照他们这句话来说啊，这里就是我们真的不是要逼死对手，我真的不是要逼死对手啊。但是话说回来，我们现在战略优势很强的，卖车不赚钱，我们也是吃得消的啊。这话是不是很可怕？对，上海那个挺好办的，直营模式他们肯定会继续搞下去的，这个其实也算是不出意外了。他们应该是不愿意搞代理的，代理太麻烦了，凭什么？大概就这些啊。我感觉比较核心的问题，包括就是这次财报会议前的关注点和包括这次实际看下来的感觉，都是在于这个保量就是保量对啊，降价保量的这一个感觉是非常明显的。或者这样说吧，就说其实对于特斯拉来说的话，这几个事情其实是大家说的比老生常谈比较多的，就是特斯拉价格是个怎么回事啊？应该这样说吧，3个关键词啊，价格、成本和需求，这3个词是特斯拉财报里面或者说对特斯拉经营状况相关的话，其实最常问的最3核心的一个关键词啊。就很多人其实这3个的理解其实是一个三角的关系啊，并不是两者结合起来就能决定另外一个的一个关系，应该这点现在就明确了。很多人之前就说特斯拉喜欢内部自己讲，我们这边要控制的就是成本降好了，那么价格就可以好了。这个是一个既假又真的话，长期来说是那么一回事。长期来说，决定价格的最根本的一个东西，其实是成本的问题啊，成本控制问题。但实际上，他们包括在提问的时候也答出来，就是他们短期或者说现在阶段的话，去决定售价的一个定价策略，主要考虑的还就是一个市场需求和和他们产能的一个关系啊。 他真是不是很在乎成本啊，我估计，就完全是基本上就是靠那个产能和一个订单的数量来去做定价的一个策略的。当然长期的话就是一个成本，所以说这关系的话应该是这样的，就说是成本其实是给他们降价底气，但实际上降不降价主要靠的还就是一个卖车订单数和他们产能的一个扩张这2点，这样的一个感觉，他们是一个三角关系啊，不是一个单纯的一者决定另外一者的一个关系啊，这个是看起来比较重要的一个感觉吧。其他的话好像没有什么太多的感想了，就大家反正我也是也知道了，我这个我对财务肯定是个外行，跟我的专业是8分马牛不相讲，就听一个大概的印象，然后说一些自己不成熟的看法，这个仅供参考了，仅供参考。我就是作为一个吃瓜群众，我知道这次财报大家比较关心的问题，应该就是一个特斯拉的毛利率，还有就是以后会不会进一步降价的问题啊。毛利率其实看出来的还并不是特别多啊，因为这里虽然是有一些数字，但是这些数字并不反映现在的阶段，因为毕竟降价还在进行当中啊，所以这些数字只能做一个略微的参考。但是特斯拉的心态和决心呢，在财务这其实被刺探出了一些内容啊，其实就是应该说刺探出了相当多的东西啊。这次财报绝对不是白听的啊，这个我们就听出来了，特斯拉就明确了，它是要保量的，大家挣不挣钱它无所谓了。就那句话都放出来，零利润卖车我们也是可以的，可以接受的。这句话就非常非常，对吧？非常恐怖吧？其他也好像没有什么太多内容。对，大概就这样吧，就大概看一下。然后刚才看到的推是应该是说新建还是想争取一下今天晚上发射啊，可以到时候大家一起来看一下。虽然说他们的空差是说了这么一句话，但是应该是财报开始前的时候，我们看那个现场的拍摄画面，那个工人还是在施工的，现在并不是一个就绪状态。我觉得这个晚上能不能飞，还是要打一个问号的，我是相当怀疑但这个跟特斯拉财报没什么关系。对，大概就是这样内容。那么录像就录到这里，感谢大家的收看啊。但完整版的话，肯定还是去也不要把我这边东西太当回事情，还是推荐大家自己去听一遍财报，或者看更完整的一个分析和汇总。那么就简单陪大家看一下，那么财报就录到这里，拜拜。那么直播的话也打算关掉了，这真的有人在看吗？可以看一下是。油管还是有人在写论文，我才不写论文。我就记笔记嘛。是感谢大家收看到这里，油管这边多少人看？油管这边还有3个人啊，确实看人不多吧，反正我们就简单看一下。对，直播这边就看到这里吧，各位拜拜，然后我也去稍微休息一下，大家看晚上看情况吧，如果能够有新建发射的话，那再好不过了，那就到时候见，各位拜。然后。